guys, welcome back to another week of Mortgage Matters in Minutes. I'm your host, Brent Rasmussen, owner of Mortgage Specialists. So today we're going to talk about kind of passing on wealth, but also helping the next generation in housing and home ownership, which is always huge if we look at the past videos that we've done of statistics and how wealth is created through real estate. But really, for some individuals, their house is their largest investment to their family's name. So what we speak to clients about nearly each and every day, and the biggest struggle first-time home buyers have, is the down payment or monies that are needed to buy a house. And I know a lot of times people hear about first-time home buyer grants, monies, programs that assist, but there's other rules around those programs that sometimes doesn't allow a borrower for qualifying for those types of loans. So what I've recently been chatting with individuals of parents that have kids of younger ages, middle ages, or maybe individuals getting ready to go off to college, thinking 5-10 years down the road, hey, at some point in time, my son or daughter is going to want a house. And how do we prepare best now for my child's future home with not living with me or not living with your parents, but living on their own? So we're going to chat about that a little bit today. We've talked a lot in the past about gifting, but there's other investments forms that are out there that still are very strong to put aside money so that in 5, 3, 10 years, whatever you want to assume, that there's even more money available for your son or daughter to buy a house. Obviously, the biggest thing we want to speak about today here is compounding interest, as the best time to start investing or putting aside money is yesterday, because the longer we have money set aside working in investments, the greater it's going to be. And that's been proven over hundreds of years here. And that we'll see ups and downs and ebbs and flows in stock markets, real estate markets, bond markets, you name it. But just starting by putting money aside is a great opportunity to allow an individual to have more down the road, just letting it sit there, do its work. So again, the earlier we start investing, the best it is. So number one, I think that one of the best, simplest ways to start saving money for a child is using a Roth IRA. And the reason why we suggest using a Roth IRA is because it can be used both for home ownership and it can also be used for retirement. So if you don't need it for home ownership for whatever reason, it still continues to build and grow wealth as time goes on. And whenever your son or daughter wants to retire, they are able to use that money as well too. So what's nice is that the contributions that you add grow tax-free. And you can also liquidate contributions, not the extra earnings or the amount you made, but generally contributions can be withdrawn tax-free. So there's a lot of benefits there taxation-wise, is why Roth IRA is usually recommended for something like that. Because for first-time home buyers, you're able to pull money from that generally on the contribution side without any tax implications. So many clients I have say start this without even telling your son or daughter, put $500 or $1,000 or $2,000 aside. 5 or 10 years down the road, you're going to have more money in just letting it sit there and doing its thing. So that's one that we highly recommend individuals starting with. Second is a custodial investment account. So just a standard investment account, but in certain states, age limits don't allow a individual that's below a certain age to own an account. So here in Nebraska, you got to be of age 19 to be of majority, meaning to do your own decisions, have your own accounts, things like that. So if your child is 3 or 7 or 10 or even maybe 18 in Nebraska, we have to get a parent to be on that account as well to allow that account to be open, and maybe even setting a few $1,000s in that account to start investing into stocks, bonds, mutual funds, you name it, to allow it to grow over time, and just letting it sit there. And next thing you know, if you pull it up in 5 years, you're going to see a lot more money than you had originally deposited. Traditional broker accounts. Sometimes you can just contact your current financial advisor, a Schwab, whoever, and open up just any kind of investment accounts to start putting money aside. That can be invested, that could be a savings account, maybe even a CD, or even United States savings bonds. Used to be an old way for individuals to put money aside for their kids without having to liquidate that money and it's tied up, are other ways possibly they can use. The more liquid the account is, obviously, the quicker your children want to access that money to use it for different things. But if you can put it, say, in an IRA or a savings bond where it's tied up versus just in a checking or savings, it's harder to liquidate. There's negative reasons or negative effects for when you liquidate those types of investments. So the idea of this entire video is thinking ahead. Right now, it's anywhere from $10,000 to $35,000 that you need to buy a house. Whether you qualify for a first-time homebuyer loan or you don't, most first-time homebuyers are in that $10,000 to $40,000 range. And that number is going to continually increase. It's not going to go down. I don't anticipate it going down unless we see a massive real estate fallout and something incredibly changes. But as loans have progressed and doing this over 27 years, the down payment percentages stay the same, but the amounts of houses continue to go up, which also increases the amount of cash to close that you need. So starting by helping your child now or yesterday is the best solution for them moving forward in the future versus you having to pull money from your retirement or your investment accounts and gifting them the money, where now you're putting aside money in their own names in different formats so that they're able to use that as your intention of buying it for a home, paying for college, you name it. There's different special investments out there for those. Let us know anytime if you have questions at 402-991-5153. Check us out on our website at mtg-specialist.com and have a great rest of your week. We'll see you here next time. Mortgage Specialists. Driven, trusted, reliable.